Hey, everybody. As you may be able to tell, my voice is a little bit strained today, so Mark is going to carry most of the conversation. But there's a government shutdown right now, and we had to get a video out talking about how that affects the housing market. So, Mark, without further ado, what the heck's going on?
So yeah, we got a government shutdown. This is again another Republican Democrat showdown over a bunch of different issues, and it can affect everything going on.
Yeah.
We've been talking a lot about the Federal Reserve, right? So, and the Fed funds rate and what that affects mortgage rates and so on and so forth. But the labor statistics that were kind of driving the bus on what the Fed was going to do aren't available now because the government's shut down. Ironically, the very same Bureau of Labor Statistics office that had some trouble earlier this year, now they're shut down. They can't do anything.
Right.
So
they couldn't do anything when they weren't shut down. So
right. I guess not much changed in a way, but point is, we don't get jobs reports from them. Now we still get some of the others, ADP, various other options that are out there and some various reports. But in general, we're waiting for the government shutdown to be over.
And that's for, so that the next Fed meeting, they can have the proper information that they need to have to make their decision, basically, right?
Right. And, they, again, they're always looking at inflation and they're looking at labor data. As the labor market gets worse, that's a sign that maybe we should ease things a little bit. And, I was listening to a podcast the other day and I sorry, I forgot exactly whose it was that particular day, but it was, they were talking about how, this labor market getting worse and lowering the federal funds rate. I mean, it's going to take a while for it because it's not like people, these companies are sitting there going, "Oh, they dropped the federal funds rate a quarter point. Money is flowing." Like, yes, let's go hire 100,000 people. No, it doesn't really work that way. But the idea is to kind of slow things down enough that it's manageable.
Right. Sure.
And they're saying that inflation is kind of where they want it. But the labor, they're sort of unsure right now.
Sure.
Right.
Yeah, it's hard to be sure when you don't have the data.
And there's a lot going on. I mean, there's tariffs and, every so often, our president opens his mouth, good or bad, and it affects the markets.
Yeah, I think he swung the crypto market like 20% up to the downswing the other day, just talking about how China is not our friend. And that whole tweet that he put out, like Bitcoin just, Ethereum, everything just tanked. And then the market wasn't as drastic, but it's amazing what the power of the pen or the power of the, I guess the thumb, as you would call it, the power of the tweet can move things. And just like Jerome Powell, when he speaks after a Fed meeting, it can really have the tendency to sway things. But we talk about that chart, right? The one that talks about percentages of a rate drop.
Yes.
So I'm curious to know, since the shutdown, has that chart changed? And if it has, in which direction?
Well, I mean, we came out of the last meeting kind of knowing everybody, was expecting another cut.
Yeah.
In October, right? So, and that sentiment continues. But then one of the things that's important is the Federal Reserve meeting minutes.
Yeah.
So the actual notes from the meeting came out last week, and that actually helped us because you could see, like, this Fed president was for another rate cut. This Fed president thought we should cut a half last time, or whatever the case may be. So you get some insight into what they're thinking. And so as of today, we're like 98.6% chance that they're going to cut rates at the next meeting.
Okay. So that's still high then.
Yeah, that's still high. The mortgage rates they've not gone down significantly. They went up after the last meeting, and we already talked about that.
Yeah.
But, this time around, it's just kind of a foregone conclusion. It's kind of already priced in. So I don't see much effect from the next Fed meeting as a result.
Unless they were to actually not cut rates, then we could see the opposite effect that we want.
We don't want that.
No, not at all.
So
that would be very, very not good.
Nobody would love that. So
what about the government shutdown as it relates to FHA loans, VA loans, like government backed insurance and stuff like that? How is that being affected by the shutdown?
So, conventional loans are fine. There's really nothing, they're the GSEs, government sponsored entities, but they sort of run into, they're not, that doesn't affect them.
Fannie and Freddie.
Yeah, Fannie, Freddie, they're fine. FHA is another story. It is mostly automated behind the scenes.
Okay.
if you need a human being to get involved, that's where you're going to run into a problem.
Okay.
So I was looking for a guideline the other day, for example, an FHA. I thought, I'll just email the help desk. Like, there's an FHA
Help desk,
hotline email that you just, email your scenario and they'll send you a response, except that it was an auto response literally 24 hours later saying, hey, we're shut down. So we can't answer your question. It didn't say exactly that. But by the time I had gotten an email, I had already gone through the thousands of pages of FHA guidelines to find what I needed.
So you just found your answer the old-fashioned hard way.
The old-fashioned hard way, which, that's how we did it for years, right?
Yeah.
I mean, we looked in the book and argued with the underwriter, like, hey, this is what the book, this is what it says.
Yeah.
And sometimes we'd win and sometimes we wouldn't.
What about VA?
So VA, again, not as affected for sure. There's not as much. A lot of that stuff, again, is sort of automated.
Yeah.
There's a VA portal. And now where it affects FHA and VA, this is kind of a fun one. So if you need a case number, for example, every FHA and VA loan has a case number that corresponds to it. It follows that property.
Yeah.
Right. So if you have a buyer who starts with lender A, and they decide to switch to lender B, and it's the same property, you got to get lender A to release that case number.
Okay.
Right? It's attached to them. And until they hit the button, which takes 30 seconds, we can't do a whole lot of anything. We can't order an appraisal. We could process the loan, but we're missing a major part with that case number. And so we had this happen recently where we had somebody switch lenders to me, thankfully. Right. And it took forever to get the case number transferred. Normally you would complain to FHA, but there's nobody to complain to.
Right. You're complaining to a automatic response email. We're out of office.
Yeah. So, unnamed large bank kind of got to hold it hostage for a little while until they could make another run or two at trying to get the loan done. And,
no kidding.
Yeah. And so poor borrowers left there like, what the heck, man? So now there's another product we don't talk about much, which is USDA.
Yeah.
It's not just meat and cheese. It's, generally rural financing. So if I pronounce that right. So anyway, but point is it's a great program. It's 100% financing. It lets you roll in your closing costs. If your house appraises for more than your purchase price, I mean, it's not a bad deal. The thing is, it is specifically in different areas and specific income limits. And there's a lot of restrictions. You just have to know that, and you have to make sure that the property fits it, and the borrower knows too. But they don't really have an automated decision engine, per se, of their own. And so there's some human involvement. So USDA is a kind of a no-go right now.
Wow.
Because of that.
And what about, I noticed you're not an insurance guy, but what about the government insurance, like the Texas windstorm we have here for hurricanes and stuff like that? Well, like, what are you seeing as far as like insurance delays and things like that?
Well, Texas windstorm is a, TWIA, as we affectionately call it, right? It's a Texas thing.
State deal,
Yeah, it's not a national thing. Now, flood insurance, that's a different story. And that's causing some problems because FEMA's basically not open.
Yeah.
And so you can't really get your flood insurance. If you can't get your flood insurance, there are alternatives. There are private companies that will do a flood policy. But I just had one the other day where flood policy was $1,000 with FEMA. If they could take it over, get the paperwork processed take over the seller's policy. The private policy was like $4,000.
Wow.
So, and one other thing that people don't even think about is, behind the scenes, we have to go do all sorts of things because of what people did during the mortgage meltdown.
Yeah.
They were faking tax returns, for example. And so in past shutdowns, we've had some challenges because we have to go get the transcripts of the tax returns to make sure that the ones they gave to us were the same ones they gave to the IRS.
Wow.
And I have seen people, as far back as using whiteout to, they've used various computer graphics programs to modify their W-2s or whatever, or their tax returns.
Wow,
and to show more income and make it look like they made more. And so that verification system is actually working right now. So we're not delayed by that like we thought we were going to be.
Oh, that's good. That's good to hear.
And one more kind of, you don't think about this thing, verifying employment.
Okay.
If they work for any government agency, who are you going to call?
They're not employed right now, actually.
They're actually not employed, which in the past, how we've handled that is like, okay, they were on their job for such a, it's like, okay, get a last paycheck stub or whatever.
Yeah,
and
do you have to handle that as like
eventually.
loss of job? Like, I mean, is that, because if you were, quit your job in the middle of a mortgage application, you run into some pretty serious problems. Like, do you treat these government employees who have now been laid off the same, or is it some exception made?
There's more grace there.
Yeah.
We'll say. I mean, it's really kind of a judgment call because a lot of this stuff, I'd say it's never happened before, except it has.
Yeah.
For 35 days, was I think the longest one, which was in Trump's first presidency, ironically.
Yeah.
And so I don't know how long this one will last. I mean, as long as a piece of string, right?
Yeah.
We don't really know.
Who knows? Yep.
Yeah. Until they come together, it's affecting a lot of things. But we're pretty much business as usual. I mean, for the most part, unless you need some human involvement, then
I guess
okay.
The biggest question I have for you is: are you seeing, like, obviously everything is business as usual. Things are functioning to some degree. With the point you pointed out a couple of small scenarios where you have to find workarounds, but overall, are you seeing a lot of public confidence as far as that translating to mortgage applications? Have you seen that remain steady, take a dip, go up? What are you seeing as far as the consumer response to it?
Well, it's interesting, because mortgage applications have been up traditionally this year, over last year. So, if you compare it to last year, things are much better.
Yeah.
If you compare it to last week, maybe not.
Gotcha.
It's more stable. And I think, one word about that, and I was kind of thinking about this the other day, that, way back during COVID, we had 1 million different buyers chasing too few houses. So right now we have a situation, we had an inventory issue for a while. There were not enough houses for the buyers. That's reversed. There's now not enough, there's more buyers, of course, or the more houses, I'm sorry, than buyers. But let's just say that they immediately dropped rates, mortgage rates, to 4.5%.
Yeah.
Which was what you believe rates should be or will be.
I said that was you. I said that a long time ago.
we'll get past
like a distant memory now.
We'll get past that. But let's say they did all of a sudden. There's still not enough houses.
Yeah.
There's not enough inventory out there. We're going to have an inventory issue. And so, and that's, and our theory about this is not 2008 again still applies. People have so much equity in their houses right now because they shot up during COVID. So, point is that, we're not prepared for that. And the last couple of years, we've kind of built some inventory to be more prepared for when rates do actually drop.
I think that's a perfect place to leave it. My voice is starting to finally give out. So hopefully by next week, I'll be back to normal.